This video is created by Jagrat Creation. It is on redemption of debentures. I wish to solve one sum here before you on redemption of debentures. Just observe the sum on the screen which I intend to solve. This is the sum which I wish to solve. It was asked in CA Inter 1989. Nandi Firms Limited issued 2010% debentures of ₹100 each at par in January 2007, redeemable at par on 31st of December 2017. Interest is payable on debentures and sinking fund investment on 30th June and 31st of December. So, this sinking fund investment in government security interest is payable on 30th June and 31st of December. 10% debenture stock, that is our liability. On that also interest is payable on 30th June and 31st of December. And you are given on 31st of December 2016, the following balances were extracted. So, this is 31st of December 2016, so these are the opening balance. We are required to redeem debentures on 31st of December 2017. So our accounting cycle starts from 1st of January to 31st of December, and here the interest dates are 30th June and 31st of December. So interest payment cycle and the accounting period cycle coincides. So we are not required to write down the entry for interest accrued on investment or interest due on debenture liability at the beginning of the year, because the interest payment cycle and the accounting period cycle coincide with each other. That's an important point to be kept in mind by the students. So these are the opening balances given to you. 10% investment in government security. This is a face value. Notice it. 10% debenture stock 2 lakh, sinking fund investment 1,86,000. Transaction during the year 31st of December 2017 included the following. On 1st of January, government security of par value 16,000 was purchased for 15,860. Now what is the interest date? 30th June and 31st of December. This transaction has occurred on 1st of January. So 31st of December and 1st of January. So date generally considered to be coincide. So here, when this 16,000 government securities are purchased, 15,840 as the date of interest and the date of purchase of investment is same. We are not required to bother whether this price is given to you is cum interest or ex interest, because no issue of ex interest and cum interest arises when the purchase of investment takes place on the interest date. So this price is considered as always ex interest, because no interest is payable for interim period, that is a period from last date of interest till the date of transaction. That's an important point to be understood, because the transaction has taken place on 1st of January. February 1st, 60 own debentures were purchased cum interest at a cost of 5,880. September 1st, government securities for 6,000 were disposed of, 5,900 ex interest. On 1st of September 60, own debentures were purchased ex interest 5,900 with the proceeds from the investment sold. So whatever the proceeds of investments are sold, the own debentures are purchased. That's an important point to be kept in mind. The balance of sinking fund investment sold cum interest 99%. See, the balance of sinking fund interest investments are sold on December 22. So when you sell the security, you earn interest, and that earning of interest occurs till the date of transaction. Date of transaction is 22nd December. Last date of interest was 30th June. So 30th June to 22nd December, we are required to now calculate the number of days on that interest will be calculated, and that interest is going to be received at the time of sale of investment. The debenture stock was redeemed and cancelled in accordance with the terms of issue. Appropriate for the year the profit and loss account to sinking fund account to the extent the amount actually required for redemption. So after redemption of debentures, see, annual transfer is 16,000, you are already told. Annual transfer to sinking fund is 60,000. But in this last year of redemption, are you required to transfer 16,000 to sinking fund? No, you should transfer to sinking fund account from profit and loss account the amount required, because the debentures are redeemed. That's an important point to be understood over here, that I will remind you once again while solving the sum at the end of the sum. You are required to prepare the following accounts in the books of company For the year ended on 31st of December 2017, sinking fund account, sinking fund investment account, though we are asked only to prepare 2 accounts, we are going to prepare one more account. So these are the accounts that I am going to prepare for the purpose of solving the sum. Investment in government securities, that is sinking fund investment. Sinking fund investment in own debentures. Sinking fund account. This is debenture stock liability account. First of all, I would like to write down the opening balances. Just read it. Interest is payable on debenture and sinking fund investment on 30th June and 31st of December. Let me write down that on the title so that I may not miss the date of interest while solving the sum. So it's my habit to write down the date of interest on the title of the solution so that when I record the transactions in sequence, the moment the interest date turns up, I just rise to the occasion, write the interest to be recovered on the investment and interest to be paid on debentures. I can work out, so I just write the interest date on the title. Now I am required to write down the opening balances. This is the face value, 1,63,760. So in nominal value, balance, and the cost is also same. As the interest date, interest period, interest cycle, and the accounting period cycle coincides, so there is no question of recording the adjustment entry for interest accrued. Debenture stock liability, sinking fund account credit balance. So on 1st of January 2017, opening balances are recorded. Now let us consider the transaction. Now first transaction. Government securities of par value 16,000 purchase for 15,840. 1st of January purchase. So purchase price is given X interest. When you purchase the investment account is to be debited because it comes to your ownership. So the first transaction, investment in government securities account debit 16,000 to bank account. Here cost is 15,840. This is how the purchase transaction is recorded. No need to calculate interest thereon because the purchase has occurred on the date of interest, approximately on the date of interest. No interest is paid on as the date of purchase coincide with the date of interest. This is an important point to be noticed. 1st of February, 60 own debentures purchased, come interest at a cost of 5,880. When you purchase the security, you are required to pay interest till the date of purchase, starting from bid date, last date of interest. Here 1st February, last date of interest was 31st of December. So 1 month interest is going to be considered. So own debenture 60 to 100, 6,000 is a nominal value. Here come interest purchase price is given, so 5,880 minus interest for 1 month will be deducted therefrom. 1 month interest, that is on 6,000 into 10% into 1 month. So here you will get the X interest purchase price. This X interest purchase price will be recorded in this cost column and the interest paid will be recorded in the interest column. This is how purchase of own debenture entry is recorded. The journal entry for that, sinking fund investment in own debenture account debit 5,830. Interest on own debenture account debit 50 to bank account credit. That's the entry. Now 1st January, 1st February done. Now the next transaction is 1st of September. Before that the 30th June interest date turns up. So on this interest that I am going to receive interest on this investment. I am going to receive interest is due on this sinking fund investment in own debentures. So on these 2 securities I am required to write the entry for interest to be received on 30th June because the interest date on this is 30th June and on this debenture also we are required to pay interest on 30th June because interest date on debenture liability is also 30th June and 31st of December. So before I proceed with the transaction of 1st of September, I should write the entry for interest. So 30th June, this is the total face value on which I am going to receive interest at the rate of 10% for 6 months. Bank account debit to interest on investment, government securities account credit. Similarly, on this also I am required to work out 6,000 into 10% into 6 by 12. Bank account debit to interest on own debentures account credit. This was the interest paid for 1 month. Here the interest is received for 6 months. Net income of investment in own debenture is interest for 5 months. So automatically 50 and 300 difference is 5 months interest that is credited to interest on own debentures account. Now on this 2 lakhs you are required to pay debenture interest at the rate of 10% for 6 months. That works out to be 20,000. So you are required to write down the entry for debenture interest account debit to bank account. Right? No. Debenture interest account debit to interest on own debentures account credit for the 6,000, 6 months interest, and the amount payable to the outsiders will be credited to bank account. Now, here we are required to prepare only this many sums. So I am not going to write down the entry for debenture interest because it is not questioned to me. But I have explained to you that on 2 lakhs at the rate of 10%, 6 months interest is to be paid. So 2 lakhs into 10%, 20,000 is the annual interest. 6 months interest is 10,000. Out of this 10,000 interest, you are not required to pay outsiders the interest on this 6,000 own debenture investment in own debentures. So you are required to pay the 194,000. The amount is payable to the outsiders that will be credited to bank account, and this interest on own debenture I have already recorded. Now government securities for 6,000 are disposed of. When you sell the investment, you receive interest. You receive interest till the date of transaction, starting from last date of interest. So sale investment account is to be credited face value. 5,900 is the ex-interest price. When you sell, you earn interest. You are going to earn interest up to 1st of September. Last date of interest was 30th June. So July and August, 2 months interest will be calculated. So 6,000 into 10%, 2 months interest 100. So amount received is 6,000. And this amount received is invested in the purchase of own debenture. Notice it, that's an important point. So bank account debit 6,000 to interest on investment account, sinking fund investment account credit 100 to investment in government securities account credit 5,900. Now this is a transaction recorded on 1st of September. Now next transaction is also on 1st of September. So 1st of September, that is the next transaction. Now these investments are sold. I am required to work out the profit or loss on sale of investment. So first in, first out. So 1,63,760, 1,63,760 is the cost. So this is the face value and this is the cost. How much for 6,000? So cost is 6,000. It is sold for 5,900. So purchase price is 6,000. Loss on sale of investment is 100. That will be debited to sinking fund. Sinking fund account debit to investment in government securities account credit 100. This is how loss on sale of securities being bought out, and the loss is transferred to sinking fund account. That's an important point. After considering, see, when you sell, you should consider the interest received till the date of sale 1. You should also work out the profit or loss on sale of investment, and that should be transferred to sinking fund account if it is a sinking fund investment. In case of purchase, you are not required to work out such profit or loss. But whenever you happen to write a transaction for sale, always remember to write down the profit or loss on sale of investment. Now, next transaction. Here also the 6,000 own debentures are purchased. Here also 10%. And this interest investment also 10% investments are there. So, and this 6,000 is the price received is being paid. So purchase of own debentures, so sinking fund investment in own debentures account debit. X interest price is 5,900. So purchase price is 5,900 already given to you. But you have paid 6,000. So the same is the interest is going to be paid. Notice it. So amount paid is 6,000. When you purchase, you have paid 6,000. But the interest element paid is 100. So what's the entry? Sinking fund investment in own debenture account debit 5,900. Interest on own debenture account debit 100 to bank account credit. So this is how purchase entry is recorded. So first September is done. Now December 22, the balance of sinking fund investment sold come interest 99%. When sales takes place, you are required to credit the investment account 1. You are going to receive interest till the date of sale, starting from last date of interest. After selling the investment, you are also required to work out the profit or loss on sale of investment that need to be transferred to sinking fund account. So once you read the sales transaction, these 3 things should come to your mind. Here come interest price is given. So we are required to find out the ex-interest value. Now all the investments are sold. So total of this debit side is 1,79,760 minus 6,000. So this is the face value of the investment sold. They are sold at 99%. That is with interest price. Sales has occurred on 22nd of December. So I am required to work out the number of days from last date of interest till 22nd December. Now 22nd December, so number of days that I am required to calculate will start from July 31, August 31, September 30, October 31, November 30, December 22. So if you make a total of all these numbers, it works out to be 175 days. Or if I want to say you in elaborate form, July, August, September, October, November, December 22. So 175 days interest is going to be received. So this is the come interest price. So you will get the ex interest sales price, not purchase price. This is ex interest sales price. Notice it. So it will be credited. So interest received will be credited to interest on investment account, and this 1,63,000 will be credited here in the cost column. This is not ex interest purchase price. It is sales price. It is exchange price. Now this sales is recorded. Now I am required to find out the profit or loss on sale of investment so that you can comfortably work out this interest column that will be transferred to sinking fund, total of credit, because all investments are sold, that is transferred to sinking fund account. Sinking fund account is credited with this. Now this is the purchase price, this is the sales price. Here you will get the loss on sale of investment, that is also transferred to sinking fund account. Loss on sale of investment transferred to sinking fund account. So this account is closed. Now here also I am required to close. This interest on own debenture will be transferred to sinking fund account, net income. Now these are sold. Now this account is to be sold. This account is to be closed. The cancellation of debenture has occurred on 31st of December, remember. So I am required to write down the entry for interest for 6 months on this sinking fund investment. So 12,000 into 10% for 6 months, 600. So debenture interest account debit to interest on own debentures account credit, that's an entry. Debenture interest account debit to interest on own debentures account credit, 600. Now 12,000, the debentures are cancelled on 31st of December, so debenture stock account is to be debited for that. This interest 900 minus 150, that will be transferred to sinking fund account, 750. Now 12,000 will be credited in cost column. So 12,000 is the redeem exchange value of this investment. So here you will get the profit on cancellation, that will be transferred to sinking fund, 270. So this is how this own debentures account is closed on 31st of December. Don't forget to write down the interest entry for 6 months, that is recoverable from the company itself on the investment in own debentures. Now the debentures are redeemed at par. So extent to which the debentures are redeemed, to that extent the amount must be transferred to general reserve. So sinking fund account debit to general reserve account credit, 2 lakhs. Since debentures are redeemed, so you are required to write the entry for debentures account debit to debenture holders and debenture holders to bank. Let me write down state to a bank. So debentures are redeemed. Now, if you remember while reading the sum, I told to you that every year 16,000 rupees are transferred to sinking fund, but here all the debentures are redeemed. So you should transfer to sinking fund account the amount necessary for the purpose of closing this sinking fund account. Because the extent to which the debentures are redeemed, you have already transferred to general reserve 2 lakhs rupees. So amount to be transferred from profit and loss account to sinking fund account is a difference amount. So 2,10,009 minus this. So amount withdrawn from profit and loss account to sinking fund account, not 16,000 in the last year, but only 5,570. So profit and loss account debit to sinking fund account credit 5,570. This is how this sum gets solved. I have tried to explain you this sum. I feel that you have followed all these things.